Hey everyone, Coach Investor back to another video for today. So let's talk about SoFi, the current situation of the company and especially the stock. Because the stock last week, well, it's down around 20%. So what exactly has happened there? Is there some company specific news? Why does the chart look like this? This is the daily chart. So you can see here a little gap. What happened there? Well, the Fed meeting, we're going to have probably one more hike and the rates will be staying higher for a longer period of time. Currently, that's the sentiment. That's the thing, that message that we've gotten from Fed Chair Jerome Powell. Of course, in the future, things might change. Now, we are just around that 200-day moving average. Then after that, well, it's really in no man's land. If we continue to go lower, then we will probably see RSI being oversold. If you want to start buying today, I mean, if you have already a position dollar cost average, the company currently is doing much better than what the stock and the stock action is currently portraying. Of course, this is a trend we've seen across the fintech industry. Now, why is fintech so hated right now? Well, because in the high interest rate environment, what is happening there? Well, it's supposed to slow down the economy. If you slow down the economy, then yes, you're going to hurt companies like fintech companies. Also, these types of companies, if they have to borrow, if they're still unprofitable, I mean, their rates are going up as well, so it's hurting their margins. And so, in my opinion, I do think that currently we're seeing peak pessimism around fintech companies. I don't know how long that will stay like this, but in my opinion, moving into 2024, the Fed will already notice well before that the economy is slowing down. I mean, I think the UAW strike will have a helping hand in slowing down the economy, which is ironic because slowing down the economy is not great, right? It's not great for the world economy. But when you look at stocks, when you look at investing, then yes, you're going to get a more of a positive reaction because companies like fintech companies are definitely going to benefit from a lower rate environment. Now, moving on to something more specific with regards to SoFi, there was the IPO from Instacart. Now, SoFi was able to offer access to that IPO. They were underwriting that IPO, which seek to raise as much as $616 million. Now, usually with underwriters, they receive fees. Now, the fees, I don't know exactly how much they are, but they vary between 2 to 6% or so. So if you take 2 to 6% from the amount that Instacart wanted to raise, 616 million, you get anything from between 12 to 43 million dollars or so that goes straight to their bottom line. Not too bad. And of course, this can open a door to many more possibilities, many more opportunities in the future. Now, if we go and look at the state of SoFi in the last couple of years, we've seen this in the past, right? Currently, it has a market cap of $7.16 billion. I mean, revenue-wise, it has been growing quite nicely. The problem here is yes, profitability. We should see profitability by the end of this year. That's what we've been promised. And so, yes, free cash flow, this is by quarter. It has been improving. It has been improving since September 2022, but still we're far from being free cash flow positive. But return on equity here as well, you can see some positive momentum. And for gross profit margin, the same thing. I mean, back in June 2021, we were sitting around 71%. Now we're at 81%. So we see some big improvements there when it comes to the bottom line. Will we see even better results for the stock when suddenly the company proves it can be profitable and grow? I think so. Because if we go and look at their last quarter, you can clearly see a pretty good trend. Total net revenue, this is on a GAAP basis, 37% growth. And while net loss has improved by 50%. If you look at non-GAAP, adjusted net revenue, of course, remains unchanged here, 37% growth. Adjusted EBITDA has increased 278%. So this company is able to grow the top and bottom line pretty fast. We should also not forget about the student loan repayment that will be coming back. So apparently at the end of Q2, student debt stood at around $1.57 trillion. Now they say here, with the resumption of the loan interest in September and payments in October, investors' fears have mounted that consumers will hit the brakes on spending, dragging down the economy. Now, this again could be seen as extremely negative, but if you look at it from a SoFi standpoint, SoFi will definitely benefit from that. Plus, if it manages to slow down the economy faster than expected, the Fed will take notice and then maybe cut rates faster than expected. Not saying they will cut rate already this year, but maybe next year there might be more cuts than what we thought. Now, I do want to show one aspect of the business that I do want to see improve, reaccelerate their growth, and that's the tech side of things, especially here with Galileo and the accounts, with Technesis as well. Currently Q4 2022, that has peaked. Then we went down in Q1, that grew 15% year over year. Then we've added a couple in Q2, but growth here was just 11% year over year. Let's wait and see. Based on what management has told us, we should see some major improvements when it comes to this side of the company. And before I end, a quick reminder for the guidance here. So the guide is again assuming positive quarterly GAAP net income in Q4 2023. So annual growth for adjusted net revenue between 28 and 32%. To me, this is still very, very good growth, and adjusted EBITDA between $333 and $343 million with a margin of 17%, which is much better than the 3% back in 2021 and the 9% in 2022. And so to me, it's fair to say that the stock will do what the stock will do in the short term. As long as the business, as long as management continues to execute, I don't really care what happens. We get even more opportunities to have better pricing for our position. And if the company continues to do what it has shown us in the last couple of years, the stock will eventually follow. And I think for long-term investors, this becomes a no-brainer. But of course, do share your thoughts down in the comments below. Have you been adding? Have you been open a position for SoFi? Let me know down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.